Well, howdy there, folks. Welcome into today's video. I did go ahead and I sold some of a stock I hold in the public account here today. We're going to speak about what stock that was, why I went ahead and made that move. It is not very often you see me sell shares in the public account. It maybe only happens a few times a year. So for me to sell some stock, I think it's a pretty big subject. We'll speak about that, why I went ahead and did it. Second thing we're going to get into is where that money went. Third thing we're going to get into is Google stock. Google stock down again, big here today. We'll speak about when does that stock bottom in my personal opinion. And the last thing I want to address in today's video is Buffett's cash situation, which is at record highs. There's a lot of talk about, does Buffett know something, big recession coming, those sorts of things. So I want to address that fully in this video so everybody can kind of understand what exactly is going on there and what Warren Buffett's up to, okay? Now, real quick here, before we get into all that, I was, while I was preparing this video, I saw on CNBC they had this gentleman on who's been so bearish for the last few years now at this point in time, and he's still staying bearish. And I got to say, I like it when these bears stay bearish. You know, these folks like this gentleman or the Dan Nathans or the Guy Adamis that are on CNBC and those sorts of folks, I won't feel comfortable anymore if those people switch over the course of this year and then they go bullish, because then that's a point where I'm like, dang, man, who's left out there to bring bullish when you still got a lot of these folks that are still in that bearish camp? It actually gives you a little level of comfort, right? And he also mentions something along the lines of like, don't be afraid to take some profits, right? Here's what I'll say to you guys about taking profits. If you're going to take profits, make sure you're putting that money where you can get yield. You can get 4 to 5% on your money right now from a ton of savings accounts that are FDIC insured, from treasuries, things like that. So don't just, if you are going to sell any stocks and take any profits in any stocks, don't just have it sitting, in a checking account or something where it's not earning some yield. Make sure you're getting your 4 to 5% because that does add up over time. So that's just something very important to speak about there, okay? Appreciate y'all joining me for this one here today. As always, all I ask in return, smash a like, make sure you subscribe to this channel. And not quite all the way there as far as how I'm feeling today. So I hope you guys appreciate me still putting this video together. I had to, I had to take care of my kids here today because my wife's under the weather really bad. So you've been trying to work and then take care of the kids. It's not an easy proposition. So I appreciate y'all being here, okay? And by the way, I got a free new workshop for you guys. That's pinned comment down there. Make sure you grab that before today's video is over. I've gotten really great feedback on that. It talks about how much money you need to retire, quit your job, those sorts of things. Really goes in depth into that specific subject. So I hope you guys enjoy that. It's pinned comments free. Alrighty, so the stock I sold, let's talk. So Revolve. This stock was up over 20 percentage points here today. Absolutely, epically massive move for the stock. And it came as definitely a surprise, a big surprise, because I can tell you those earnings were not all that. Let's just call it that. So I saw this stock up 20+% today, and I was like, thank you, thank you, thank you, and thank you. Oh my gosh. This is a stock that, now because of this 20% move, now we're up substantial amounts of money, and I hold 3,000 shares in the public account. So what I went ahead and did today is I sold 300 shares of Revolve at a little over $21 for the stock overall. And I feel pretty thankful to be able to go ahead and do that. Now, I spoke, extensively about the earnings last night in last night's video, along with a few other subjects, but I spoke about the earnings extensively, right? And the problem here was the company's income statement was absolutely horrible. It was a D grade income statement. The only thing that kept it from being an F grade was the fact that they still remain positive net income. If they'd went negative net income, then this would have been like an F grade income statement here, but D grade, very bad. And so whenever you can get a situation where you have a stock price of a stock you own go up 20+%, when they just released a D grade income statement, you got to just be very thankful for that. Very, very thankful. So today I looked at this and I said, let me just take a little chips off the table in regards to this one, since it was up so extensively. I thought, okay, the stock maybe is up 2 to 5% today. There's no reason to take any profits there. But being that it was up over 20 percentage points, I was like, okay, let me just take a little bit off the table here. I feel like, I don't know if you guys ever played Texas Hold'em, poker, or something like that, right? And you win a hand, but you had a bad hand. You maybe bluffed your way out of it. You got out and you escaped with a bunch of chips, and you're like, dang, man, whew, I'm a lucky dog. Honestly, that's kind of how I feel in regards to this whole situation. Now, if this was a If this was, let's say, a B or an A grade income statement, I wouldn't have sold any today. I would have been happy to just keep all 3,000 shares. But being that this company's revenues have been starting to trend down, that really worries me. I really need to see that. And it sounds like revenues are going to be down again next quarter. And so I'm really concerned about that. If the revenues can turn in the story, it's going to get a lot more positive, okay, and I'll get a lot more positive and constructive around the stock specific. But when you have a company that is reporting negative revenues, that's not too fun, right? So just a little food for thought there. Now, you got to ask yourself, do you sell into strength or do you sell into weakness, right? And I think some of this is a little bit more personality related. Some people like to sell into strength, so a stock is going up, it's showing a lot of momentum, and they like to cash out some shares into a strengthening stock. Some people, it's the flip side, they like if a stock weakens, they like to sell shares, whether they're up on those shares or down on those shares because the stock's weak. Me personally, I like to sell into strength. Strength is what I like to sell into. I like to be in a situation where I'm very profitable on a stock. It continues to trend up, and I go ahead and sell that stock into some strength, like a Revolve here today where I cashed a little bit of my shares, right? Remember, I still hold 2,700 shares of this stock now in the public count, but that's down from 3,000, okay? So the question is, where do I put that money? Well, the original thought process around this sell here today wasn't actually around selling some Revolve shares. The original thought process was, I have a problem, big problem, okay? And the problem is, in the public account, which is a multi-million-dollar account, I am very little hedged at this point in time. Going into today, I'm a little over 0.5% hedged in the portfolio, right? A little over half a percentage point hedged. So I looked at this and I said, I need to hedge up a little bit more and get closer to a 1% number here. So that's where my thought process came about, let's go ahead. We got this situation. We could take some little chips off the table in regards to Revolve on kind of a fortunate up move here and go ahead and put some of that money into, a little further hedging, right? Which my hedges I have for this particular portfolio are CMG and Toll Brothers, both stocks that if the market got hit heavily, those stocks would get nailed heavily because Chipotle is a very high valuation name. Toll Brothers is a home builder. Those are the sorts of stocks that get pounded if you got any weakness in the market, right? And whenever I'm thinking about this, I'm thinking about insurance for the portfolio overall. Now, where I need to be is I need to be 1 to 3% hedged. Now, if you're watching this video and you got $10,000 in your portfolio, $5,000, $15,000, hedging probably doesn't matter for you that much. You can learn about the subject, but it doesn't really matter for you. It's the more money you have, the more important hedging is. The more money you have, the more important understanding hedging is. The problem is a lot of people wait till they already have big money before they start to learn hedging. I think it can be valuable. I wish I would have learned hedging strategies a lot younger than I learned them. I didn't have to implement them, but I wish I learned them a lot younger, right? So my thought process is if I have my portfolio less than 1% hedged, I'm living dangerous, right? It's no different than if you were to go out and drive your car around, you had no car insurance, let's say, for instance, right? That's living dangerous. You can do that, I guess. I mean, it might be illegal in a lot of states, but you're living very dangerous. If something happens, you can, choose to not have, let's say you own a home and you could choose not to have insurance on your home in case of a fire or flood or something like that. You can choose to do that, right? But man, if that bad thing does happen, you're going to be wishing so bad you had some insurance there. That's the way I think about this. So if I'm less than 1%, I'm just living dangerously. I need to get up to like a 1% or above number for the portfolio hedged overall. Now, if I'm more than 3% hedged in a portfolio, it's likely because we are in a crash at that specific time, or I've gone just like full blown like bear, something like that. Like that would be insane for me to be more than 3% hedged in the public account. I mean, to get to a 3% hedged on a $2 million, plus portfolio, I mean, we're talking about that would be $60,000 plus in hedges, right? 2 million, 3%, $60,000 plus in hedges. So that would be a significant, crazy number. So that's, if we're in a crash, keep in mind, let's say we did go through some sort of crash and, Chipotle falls big and Toll Brothers falls big. Obviously, those will, those put options would increase rapidly, and next thing you know, it'd be 1.5% of the portfolio, 2%, 3%. Meanwhile, if we're in some sort of crash scenario, a lot of these stocks come tumbling down, right? An elf on a shelf that we're sitting on a 2,718% gain, all of a sudden starts to fall, right? A Meta starts to fall in a crashing market, and a Tesla also starts to fall. So that's kind of, how I think in regards to this. Now, there's another stock I really wanted to hedge against here today. I'll be honest with you guys, okay? But there's a problem. There's a big problem, okay? But I really want to buy put options on this stock. And that stock is Wingstop. So Wingstop is out of flipping flapjacking control. This stock is now at 113 forward PE based upon this year's estimates, okay? So let's say they even come in better than that. What are you at? Maybe a 95? 100. It's ridiculous. Based upon 2025 numbers, trading 93 times, that's ridiculous. But the problem is Wingstop put options premiums were sky high. I really want to do this. I was looking at like 350 strikes. 350 strikes today, and if I recall, those were going to expire January 2025. Now, if I recall, I had to pay like $50 or somewhere around there, roughly in premium for those, which would mean I would need the stock to go down to, we can call it, at least 300 or a little below 300 to break even, right? To break even. Now, to start actually making a profit there, I obviously need the stock to go way down. I need to go to like 250, 200, 150, something like that. So I really, really want to buy puts on this one. It's just, I don't know if I'm willing to pay that much. And the problem is with a stock like that, I'm not the only one who knows of that. There's many people in the market right now. They're looking at a stock like Wingstop and saying, man, this is a little ridiculous in terms of that forward PE on this stock. And so, and also the other thing with these sorts of stocks, they could keep climbing short term, right? A stock like this is going to come crashing down hard. But to get the timing right on it, very, very difficult, Maybe the stock has another several good months or several good quarters. Maybe it goes to 450 before the big crash happens, where it crashes down to 300 or 250. Well, shoot, by that time, you might not even have made money after it had its big crash because it went on another big run before that crash. So there's a little food for thought there. But anyways, Wingstop. Oh, man. Really want a little put options there, okay? All right, now let's talk about when Google will bottom, and then we'll talk about Buffett's cash situation and kind of what's going on there. So Google McDougal, here's when Google stock will actually bottom. There's one of two scenarios to play out here. The first one and I'm talking about a true bottom. I'm not talking about some short-term bottom where it's like, up for a day or a few days or something like that, right? I'm talking about a real bottom and like it starts to sustainably move upward. Real bottom, okay? There's two ways it can get there. The first one is the next quarter, and I'll tell you guys which I think is more realistic. If next quarter they come in and they beat all their numbers and they beat on their guidance, then the stock will form a true bottom and it'll start to sustainably move up from there. The other situation in which this stock could form a true bottom would be if folks get confidence in their AI strategy. There's a few issues with Google stock right now, but the main issue at the end of the day, people do not have confidence in Google's AI capabilities. They feel like somehow, some way, Google got way behind on AI, which is crazy to think, okay? Now, which one of those is more likely to play out? Well, confidence in AI, I don't think that's changing short term. I think Google is going to have to prove to the market over the next couple years that they are a leader in AI and they're going to be a leader in AI and they're going to be huge in this market. But I honestly think that's got to play out over the next several years, guys. I don't think this is something that just happens. So I'm not looking at that. I think the more realistic possibility is next quarter they come in, maybe they beat their estimates, they have a good guidance, something like that, and then the stock forms a true bottom. But for right now, it's a messy situation. Now, if neither one of these situations happen, then the stock's not going to form a true bottom, and it's going to continue to flounder and go down, never mind if we have some market weakness. That's the thing with Google stock that's a little scary. I will say it's a little scary in regards to Google stock. We haven't even seen any real weakness in the Qs, in the NASDAQ yet. What happens if we actually see some real weakness in the Qs, in the NASDAQ in general, right? Where's a Google then? A Google's probably 120, 110, something like that, if we actually saw some real weakness in the market. So that's a little scary. Now, in regards to Google McDougal, by the way, I put out a very in-depth 27-minute video covering Google a day ago. Looks like about 44,000 you guys have gotten to see that so far. So if you really want to just hear me talk about Google McDougal and the risk reward there, all the positives, negatives, definitely watch that video. You'll get a lot of value out of that one. Okay. Now, let's get into Big Buffett. This is a subject I'm extremely excited to talk about. And the reason being is so many people are looking at Buffett, they're looking at his cash load, let's call it that, and they're saying, oh my gosh, like Buffett, he must know something. Like there's got to be a crash coming. And Buffett, let's be honest, guys, he's very well connected. He knows everybody who knows everybody, but not just that. He owns so many businesses that are in so many different spaces that he can really see everything. I mean, the guy owns one of the biggest railroads in all the United States of America. I mean, that's going to give you about as good as intel as you possibly get. So when a guy like that owns so many businesses across so many different industries is building a massive cash pile and is choosing not to really buy stocks, makes a lot of people say, what's going on here? Something fishy is going on for somebody that's, some would say is kind of perma-bullish to not be buying, right? So here's the deal. Buffett's cash pile is up to $168 billion. Now, experts are saying, he expects a recession, those sorts of things. The crazy thing is Warren Buffett's company boosted its cash pile by $60 billion in 15 months to a record $168 billion here, okay? Now, I got to be honest with you guys. I am wondering, maybe this is a little conspiracy theory, but do you guys remember what happened when they, the latest trades came out in regards to Warren Buffett and Berkshire Hathaway? The news broke that Warren Buffett actually sold some Apple shares, which was shocking because that man has never even been interested in selling Apple shares. So the fact that he wanted to sell Apple shares was mind-blowing. It was like, wow, like why? And it's not like he's short on cash. The man's got cash to the sky. We know this. So in order to sell Apple stock didn't make any sense. Unless you think the stock's overvalued or its best days are behind it or you have somewhere better to put the money, but they got so much money at Berkshire. So it doesn't make sense unless you really are losing confidence in the business or there's an overvaluation there that you're like, I think this company is very overvalued. There's something going on there because there's no reason for Buffett to build even more cash. But I got to wonder, is Buffett potentially selling more Apple stock? Because things are not adding up here, guys. Apple's down year to date. Down. Now, keep in mind, they did beat their last quarter numbers. Also keep in mind, we know Apple's always buying back tons of stock, right? So to push Apple down, while the Qs are up about 8% so far this year, Amazon stock's up 15%, one of its peers. Meta stock's up about 40% this year, and Nvidia stock's up 61%. So its friends are having the biggest party, right? The NASDAQ in general is having the biggest party, and Apple's not participating at all. And it makes you have to say, what is going on here? Is it possible that Buffett's potentially dumping shares? Because why can this stock not do anything right now? Because Apple's out there buying shares. They're always buying shares. Every quarter they're just loading up on shares. And that's one of the things that helps push Apple stock price up over time is the fact that Apple's always out there buying. So very suspicious. That's the way I'll describe it. Very suspicious that Apple stock is not doing anything. Maybe it's something government related. Maybe Buffett knows something about the DOJ and potentially Google not being able to be the default search engine on Apple, and then Apple, potentially making, I've seen estimates of $10 to $20 billion less in profits per year from that Google situation, right? I don't know. There's something fishy going on, I can tell you that much though, okay? Now, if we look at Buffett's cash pile over the years, right? Back in from 2012 to 2013, the cash pile actually shrunk. Then from 2013 to 2014, the cash pile grew. 2014 to 2015, cash pile grew again, but not as nearly as significant of a number on a real basis, but also on a percent basis, right? Much bigger percent basis and overall total sum number here of 14 billion. Then Buffett shrank his cash level here, right? And he was definitely out there buying. Then from about, let's call it December 2016, so going into 2017, through 2019, the man grew the cash pile all the way from 86 billion to 128 billion. So that really, in my opinion, started the big kind of Buffett being careful run, right? that has lasted years. And then he went ahead and added more to that cash levels. December 2020, up to $138 billion. Then 2021, up to $146 billion in cash and short-term investments. Then it shrunk right here. And we'll speak about why that shrunk right there. Went from $146 billion to $128. So a big decrease there, especially, Buffett and Berkshire is always throwing off huge profits. So that means they were definitely out there being aggressive. And then huge buildup in the cash now to, $167 billion. And here's the deal. If Buffett's actually not really participating in this market, not buying stocks, and let's say there's a situation where he is selling more Apple shares, he's going to take this cash pile to over $200 billion this year. This year. Over $200 billion, which is just it's a number you can't even really fathom, right? Now, if we pull up the last 5-year chart here, this is very self-explanatory, right? You guys know my saying, I always say, buy the dip and never trip, right? And it's always something I always remember, especially when you're in a bad market, a correction market, a crash market, buy the dip and never trip. Warren Buffett is the definition of buy the dip and never trip. So why did Buffett's cash balance go way down significantly in 2022? Well, what happened in 2022? Massive crash. The NASDAQ fell well over 35% peak to trough. The S&P 500 fell well over 20% peak to trough. Maybe once out of every 5 to 10 years, you get a NASDAQ down 30+% and a S&P 500 down 20+%. Maybe it happens one out of every 5 to 10 years. So when you get that opportunity, you've got to take advantage. And Warren Buffett certainly took advantage. Now, did Warren Buffett take advantage of the best stocks in that situation? No. He missed out on the ones that were hit the hardest, the Shopifys and the Netflix and the Metas and the Amazons and those sorts of stocks. So he did miss out. But with that being said, he still, I can tell you, if you bought almost anything in 2022, you're probably looking pretty flippin' flapjack and good on those stocks now at this point in time, right? So the big Buffett, he buys a dip and he never trips. Now you got to ask yourself, here's the situation we're in right now. NASDAQ's around all-time highs. S&P 500's around all-time highs. The Dow, Jones Industrial Average, is around all-time highs. Bitcoin is near all-time highs right now. And NVIDIA is at all-time highs or near all-time highs. So you got to ask yourself, is the big Buffett, Big Daddy, is he going to be buying when everything's at all-time highs? Well, that's not his style. That's not his style at all. He likes to be buying heavy when we have a correction in the market or when we have a crash in the market. And that's when you see him deploy money aggressively out there, right? Which we're just not in that market right now. We're not. Not when you got all these asset classes near all-time highs. And you look at things like Bitcoin or NVIDIA, those are really proxies for risk-taking. So when you see Bitcoin moving the way it's moving or NVIDIA stock, that means people are really in max level risk-taking mode at that specific moment, right? And there can always be levels of how much higher you go from there. It could last another 3, 6, 12 months, right? Of more and more risk taken until it's reached a insane territory, which is when you can officially get every single bear off the sideline. And even the most bearish bears turn to kind of like bulls at that point in time. But for now, this isn't the type of market Buffett wants to buy into, right? Now, also, if we look at this, on top of this, and then I'll talk about a few stocks that I think Buffett should be buying right now, my personal opinion. But here's the deal. Buffett looks at the S&P 500 PE ratio, and he's not going to really want to buy right now. The PE ratio on the S&P 500 right now is about 27. This is the past 20 years I pulled up here for you guys. Guess what? We're about as high as we've ever been in terms of PE ratio, other than coming off of the great financial crisis, right? And coming off the Rona crash. Outside of those two scenarios, we're about the highest we've ever been, which means, it's not going to be the stocks are not going to be very attractively priced, especially the type of stocks Warren Buffett really likes, right? So that's, I think, huge. This is a very high PE ratio right now. If the PE ratio was 17, I would tell you Buffett would probably be buying a lot of stocks. At 27.5, he's just not going to be very enthusiastic because the deals in the market are not his type of, because think about where the deals are in the market. If you can find deals, they're likely tech related. Does Buffett buy tech? That's not his thing, right? The other deals you can find in the market are more like small cap stocks, right? More Russell 2000 related stocks that have maybe $500 million market caps, couple $1 billion market caps. Buffett's it's not even worth his time to buy $1 billion market cap. If he was, he would just buy the whole entire company out. So those Russell 2000 small cap stocks that look as a pretty attractive opportunity to a lot of us that are smaller investors, to somebody like a Buffett, he can't even consider that. And then the tech stocks, he can't even consider those, right? So it's a tough situation for Buffett. Overall, I do believe whenever Buffett steps down from Berkshire, I do believe they're going to invest in maybe not necessarily smaller caps, but I do believe they'll invest in a lot more tech-related companies. Now, there's a few stocks I'm looking out there right now, and I'm like, Buffett should be buying these stocks, and should have been buying these stocks for a while. Meta, PayPal, Amazon. These are perfect stocks for him, but he's always had trouble with Amazon in terms of the valuation there. It's always traded rich. It always will trade rich. It's got that sort of growth, right? PayPal, I could almost guarantee you, Warren Buffett's probably never used PayPal or Venmo in his life, but I think that's a really attractive stock for somebody like him that likes a very stable business at a very low P ratio. I mean, the forward P on PayPal is like 10 or 11 right now. That it's, good balance sheet on that company, stable business model overall, consistent growth over the years. That's such a Buffett stock. But, if you never use the apps, which I guarantee you he probably has never used the apps, it's not a Buffett thing, right? Meta stock, perfect for Buffett. One of the best balance sheets in the world, such a stable business model, people that continue to use that product, no different than his Apple position, right? Super profitable, actually a fairly low PE considering the growth rates of that company, founder led by Zuckerberg there, but I don't know if Buffett really fully understands Facebook and Instagram and WhatsApp. So, unfortunately, those are the type of stocks that I'm like, man, those would be great for him to build big positions in over the next several years, but unfortunately, he probably just can't, get there when it comes to those sorts of stocks. And so we'll see whenever, he steps down someday. I wouldn't be surprised if they're adding to some of these sorts of companies, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Make sure you get my free new workshop. That's pinned comment down there. I've been getting a lot of great feedback on that. Seems like a lot of you guys are enjoying that, learned a lot from it. How much money do you need to retire, quit your job, all that good stuff. Dives into those sorts of subjects, pinned comment. Much love and have a great day.